Hey guys, in this lesson, we're going to learn about property, plant, and equipment, or PP&E for short. PP&E is exactly what the name sounds like. In the context of the balance sheet, PP&E is the value of the company's properties, plants, and equipment that it owns. Let's go over three things. First, let's understand what exactly constitutes as properties, plants, and equipment. If the company owns factories, the value of that factory building is part of PP&E. If it owns the land, the value of the land is part of PP&E. The manufacturing machines are part of PP&E. For retail stores, the shelves, the refrigerators, the credit card machines, the shopping carts are all part of PP&E. And in corporate offices, the tables, the telephones, the computers are all PP&E. Basically, every physical asset other than inventory used to operate the core business is considered as PP&E. Second, let's understand what the value of these PP&E is based on. The value of these PP&E is carried on the balance sheet at the lower of cost and the fair market value. We explained this concept when we learned about impairment charges and gain and losses on sale of asset. So check out these lessons if you need a refresher on the concept. And third, PP&E is usually presented on the balance sheet, net of accumulated depreciation. Recall from our earlier lessons on D&A that there are wear and tear to PP&E as they're used more and more over time. Naturally, the original value of PP&E, based on cost, should be reduced to reflect the natural wear and tear. A company may have bought a vehicle for $20,000, but that vehicle is definitely not worth $20,000 after being driven around for 5 years. It's worth less and less as it accumulates mileage. Technically, PP&E net of accumulated depreciation is known as net PP&E, and PP&E before accumulated depreciation is known as gross PP&E. But public companies usually don't make this distinction and just show the net PP&E on the balance sheet. They might not explicitly label it as net PP&E. They usually just call it PP&E. But you should know that this PP&E is presented on a net basis, net of the accumulated depreciation. So to summarize, the value of PP&E companies carry on their balance sheet is the historical cost net of accumulated depreciation to account for the wear and tear, and carried at the lower of that and fair market value. PP&E is usually used to operate the business and generally isn't expected to be converted into cash within a year. Therefore, it's a long-term asset. In fact, it's probably the most iconic long-term asset because it's something that pretty much all businesses have. PP&E is a tangible asset. It can be physically touched. In the next lesson, we'll learn another iconic long-term asset that many businesses have. But unlike PP&E, it's intangible and can't be physically touched.